The only simplicity to be trusted is the simplicity to be found on the far side of complexity. Alfred North Whitehead, my friends, that is exactly what we strive for, is to make the complicated simple. That is not to make it so complicated it doesn't work, to break Occam's razor, Occam's principle. That which is simplest and functions works best. The more you complicate machinery, you end up being like the Germans in World War II, who had a hard time keeping their tanks in the field, whereas the Russians had them by the thousands. They were simple, they weren't the best, but they worked. And we want what works. We do want the best, but not so technical that it's not going to function. And of course, you can make things so very hard that you never find a trader. You talk yourself out of them. And with what we employ using our stops, and when I say stops, I'm literally talking about our profit and loss bands with these positions, and we use the 2-day ATR to help us set our profit bands and our loss bands. We use the candles. We use the trend lines, and we use the volume. And I would like to point out to you over and over again, look at where you see the cleanest, best trades taking place. And invariably, you see turnarounds where they occur when they're a good turnaround. It doesn't happen all the time, but it does happen quite often, going up or down, where you see really high volume and you see a candle move in a direction and then it stop. Then you see it turn around and start moving in the opposite direction. Of course, what we like best, this is an okay sign. You can see we've got a red down candle and then it goes green the next week with decent volume. But what we really like to see is a very small candle, and we like to see wicks on either side, particularly moving in the direction of the new trade, and higher than average volume, telling you, of course, with the change in trend that it is being accelerated up, that the bottom has been found or that the top has been found. And again, small candle, lots of movement, and then things drop down from there. So pay attention to volume. We've got a great teaching on volume. What we're sharing with you today, as far as the link at the end of the show, is going to be on volume. So very much want you to get that. And also for subscribers, we have a nice training for you also. If you're not a subscriber, just sign up for free at chartingwealth.com. That list is never spammed, never shared. Let's jump into these charts. We see everything down for the day but gold. We look at where things are on the S&P 500 and the NASDAQ 100. We can see where we had that peak, real peak, where things just popped up above normal, above average volume. Nice, decent candle. And then since then, struggled to get above that. So are we topping out on the market? Could be. We look at the 2-day, we're still above the weekly trend line. Same on the half-day, but we are watching. Not saying we're pulling our trade. This has been a great trade for us, but we are paying close attention. We don't have to get every single penny, but we do want to see if things are just going to slide sideways and pop up even more. My friends, when you have a government that is into the markets to the extent that our modern government is, the Federal Reserve and such, and they are just producing money hand over fist, you expect things that are real to go up in value because you have inflated the currency. You have $100 million in circulation, and you put another $100 million in circulation, and nothing else really changes. You would expect your prices on those goods to double, wouldn't you? Well, you would, because you got twice as much money. I mean, no fool's going to turn around and just give away something they have. Say it's bread. Say it's an automobile. They're not going to give it away when they realize the currency's been inflated, that someone has just printed another $100 million worth and thrown it into the market, and you're supposed to give the same value to 200 million in circulation as you would to 100 million with nothing else produced. Of course you wouldn't. That's what I argue is so much of what we've seen with the inflation in the market, just printing money backed by nothing. They're not even printing it. They're just changing decimal points on the Fed's balance sheet. So those kinds of things are a hidden tax, and they also increase the value of real things. Well, I take that back. They don't increase the value. They increase the dollar amount as far as what its value is. If you have something that's not being inflated, it stays the same. Now, are we seeing that reflected in gold? No, we're not. We're going to get to gold in just a minute. But enough on my high horse. Down for the day, 0.25%. We're watching to see if markets are topping out. Let's look at the NASDAQ 100. Same kind of thing back on June the 12th, struggling to get above that, down 0.33%. See, the NASDAQ is pushing through the two-day trend line and the two-day chart's pushing through the weekly trend line, and the half-day chart's pushing through the weekly trend line also. So we will definitely keep an eye on where these markets are going this next week. What is up with 20-year bonds? Look at them. We had a red candle form this week, and you can see on the two-day chart as it pushed through and as it has accelerated down. This is the Thursday, Friday candle. Look at all that volume, and look at how it has just moved down. Higher than average volume here, higher than average volume last week with that spinning top, and things just rolling over, going down. So we see bonds going into the negative this week, and we are tagging them as such. What about gold? Gold is up for the day, 0.75%. You can see we're on the two-day chart. It is pushed through with a doji. Now that means lots of indecision on that weekly trend line. You can see the same on the half-day chart on the weekly trend line where it's pushed through. Did that once before and fell back through. So we'll keep an eye, still red on the weekly candle, but we'll keep an eye this next week. Maybe we can get back into gold. If gold starts to take off again, we will be buying. I hope you will be practice trading. Okay, what do we see on Bitcoin? Well, Bitcoin pulling back some for the day, 0.40%. We can again see we're on that week beginning June the 20th, where we had the most recent high. And since then, Bitcoin has just been spinning along sideways. Latest two-day chart, doji, pushed through the weekly trend line. Same on the half-day chart over the last day and a half, sliding through it. So again, weakness there. Maybe it's just going to relax, digest some of those gains, and pop up again. I hope it does, because again, I want Bitcoin to look more like the S&P 500, where it goes from red to green, but man, since March, it's been nothing but green. But anyway, we want a chart that tracks, that we can follow. Hopefully Bitcoin will get into that at some point. That's what we keep waiting for. And again, we can see where, Bitcoin back in April hit about the same market as it is at now, where it hit around June the 20th. And we just want to see, is Bitcoin going to bound above that and move up, or is this going to be some kind of ceiling? Don't know at this point. If we had a ceiling we could see, that would be nice also. So we'll continue to watch over the course of this next week. By the way, charting cryptos, commodities, and currencies, I will be putting that out for the general public this afternoon up until this point. For this week, as always, it's been reserved for our Patreon members. Also, Patreon members, you have the three-wave trades as a curated liquid stocks and ETFs, a group that we help track for you throughout each week, showing you interesting things there. And of course, your weekly vertical crossovers were in your email, and everything we do for Patreon members is always uploaded at our Patreon site, Charting Wealth's site on Patreon. Appreciate the Patreon sponsors. Appreciate you, my friends. Be sure to like the video and subscribe. God bless. All the best from the whole team at Charting Wealth World Headquarters.